economy is projected to continue to recover in the second half of 2022, albeit at a more moderate pace amid global headwinds. However, given the strength in the first half of 2022, which grew by 6.9%, we expect growth for the year to be at the upper end of the range of 5.3% to 6.3%, even after taking into account the slower global growth. Growth for the rest of the year and 2023 would be driven mainly by private sector expenditure, particularly as tourism sectors normalize towards pre-COVID levels. Investment activity stands to benefit from the realization of multi-year projects such as the My Digital, East Coast Rail Link, and the LR3 project. Supply chains are also expected to ease as receding COVID-related disruptions and slowing global trade alleviate some of the pressures going forward. This would offset the expected moderation in global growth. There are also several factors underlying the resilience of our exports. The domestic economy would be supported by the improving labour market, which has shown continued improvements in tandem with stronger economic activity. The improvement in the second quarter was supported by robust employment growth. Jobless claims fell significantly and rehiring of retrenched workers remained relatively strong. Higher frequency data from SOCSO indicated a continued decline in layoffs and relatively strong hiring activity in the second quarter. On a year-on-year basis, private sector nominal wages improved in line with economic activity, recording a higher growth of 7.8% in the second quarter. This was partly supported by the minimum wage hike, driven by expansion in both services and manufacturing sector wages. Going forward, continued expansion in economic activity is expected to lead to a broader recovery in the labour market. Hiring intentions were strong, with higher job creation in the second quarter. For example, for the second quarter this year, about 29,400 jobs were created compared to 25,800 jobs in the first quarter. So this will be key in supporting the domestic economy. Additionally, we recognize that the recovery is uneven and improvement in some segments have continued to lag behind others. While most economic sectors have recovered strongly, about 20% of the economy still remain below pre-pandemic levels. This is most severe in the construction sector due to labour shortages and higher input prices. Tourism-related industries have only recently begun to recover. In the labour market, the recovery amongst vulnerable groups, particularly the youth and elderly, along with low-skilled workers, is lower relative to other groups in the labour market. It is for these reasons, while macro policies are recalibrated as the overall economy recovers, targeted policies would continue to support these segments of society.